Hello all, welcome to Sand Compounding. This is Sandeep Anand. I'm starting a new series called 20 for 2030. And what does that even mean? For investors, in investing, the formula of compounding, which is very powerful, and the formula is P into 1 plus R by 100 whole to the power N. And N is an exponential factor. N is nothing but, we all know, it's a time invested, time we invest in the capital is invested in a business, or the tenure as we can call. And the tenure or longevity of our investment is very important because if we make investments in businesses that can sustain for 10 to 12 years with a good level of growth and at the right valuation, we are made home. The returns on the capital invested would be very high. Now, how do we find businesses which can run and which has such longevity of 10, 12 years, especially in today's world of disruption? Every business is getting disrupted. Erstwhile, no wonder Warren Buffett, the legendary investor, used to find businesses which are least disruptive and that can run for a long time with growth, and he called it as moat. While moat investing, I don't know if it's really that relevant in today's generation because all businesses are getting disrupted with the advent of digital and mobile and internet. Now, identifying such businesses is a very difficult task, and I have tried my best to find out 20 such businesses which can pay way till 2030, and come 2030, in hindsight, these businesses would have been great to hold for such a longevity period. Now, how do we find these businesses? I've applied the principle of inversion, which I learned from Charlie Munger, and we look forward to 2030, and when we look back in hindsight, the inversion principle, based on that, what businesses could and why those businesses could sustain till that period is what I've done. So here are such 20 stocks, and one most important thing, not in investing, not all businesses are great investments at all point of time, but most point of time. So there could be reasons being valuation is one important factor which can control the time when we enter into a business. If there are frothy valuations, our returns would be mediocre. So it's very important to identify great longevity, great businesses which has longevity and at the same time that has good growth and the right valuation. So, but this could be a blueprint or a watch list that we can use to identify, and when the correction happens or recession happens, these great businesses could be a great entry point, could give a great entry point. Hope this gets interesting as we move on. Continuing my session of 20 for 2030 businesses, the next in line is a popular marquee Italian premium brand called Ferrari. Ferrari is known to even kids and known to all of us as a racing leader in Formula 1. Now, Ferrari is also known for its luxurious performance sports car, and Ferrari has gained a lot of growth over the past few years, especially with the management that was there, and they have launched a lot of designs and models in the last decade. They have grown pretty well. Now, Ferrari will always be a dream. That is their moat or competitive advantage. They will always only produce so many cars which will be like a supply even one less than the demand, and that is a way they are going to maintain the exclusivity and the premium luxury brand sports model sports car. That is their advantage. They will never have the supply exceeding the demand, and they will not make these cars just readily available, bringing down the price, and that's why their pricing will sustain, and they're constantly innovating new designs and new models. They're also now venturing into designs of hybrid models and also electric EV and autonomous cars, which they are anticipating to launch by 2025. Now, Ferrari also has a strong management, and their focus is rightly there, and let's analyze why Ferrari is part of my 20 for 2030 list. Let's see the business overview of Ferrari. Now, the starting slide, I just wanted to indicate there, I love their the logo as well as what is put there. You cannot describe passion, you can only live it, by Enzo Ferrari. Enzo Ferrari was a founder of Ferrari. Now, the business segment, it's a most valuable brand in luxury performance sports car from Italy. They're based out of Italy, and Ferrari is not an unknown name to any. Ferrari's heritage remains unparalleled and has been a dominant epitome of exclusivity, sporting performance design and premium styles since 70 long years. They have been existing since 70 years and undisputed leader in the whole sporting and performance car space. Enzo Ferrari was a founder and of Scuderia Ferrari. Scuderia Ferrari is the racing arm. That's their main business. And Ferrari automobiles brands. And Ferrari is the longest running and most successful team in Formula One history. Now, their secret sauce for success over the last 70 years has been one simple factor: constantly preserve the exclusivity. Now, Louis Camilleri, who's a new Ferrari CEO since 2018, according to him, he is still going to focus on maintaining that and preserving that exclusivity they have been always doing. The core of the Ferrari business is always Scuderia Ferrari, which is a racing arm, and their strong competitive advantages through the exclusivity and premium branding in sports car and racing theme. They play the moat by always having artificial supply. They create an artificial supply constraint, and there will be at least one less car than the demand, thereby preserving the exclusivity. Now, Ferrari is selling a dream. Now, it's an aspirational dream brand, and that is the dream that is driving their growth, and they are sustaining this brand for the last 70 years. And I think this unfulfilled dream, but because of the artificial supply constraint, is going to remain for the next decade as well, and that's their key USP. Now, the key business verticals are, the current management focus before that is on brand diversification. They're trying to create a dual identity with one unique brand, and so they are venturing into slight brand extension businesses, like what I would call it as a retailification of Ferrari branded merchandise to capture more retail value. Today, the retail value is around 800 million euros. Now, they target to contribute 10% of Ferrari's profitability the next decade from retail merchandising of brand equity. Now, the three key business verticals are cars and spare parts, which is the core Ferrari sports cars. Then the engines, some of their partnership with Maserati, they ship the engines to them, and the sponsorship, commercial and brand revenues they get from Formula One racing activity, which is a significant branding proposition, and they garner a lot of revenue for them from the branding. Now, they will also launch Ferrari esports platform soon, with live events in Ferrari theme parks, museums and races. These are high margin businesses, and they have 4 product ranges in the cars, like Sports, GT, Special Series and Icon, and they launch designs across these 4 segments every year. With respect to revenues, profitability and segment wise analysis, so overall the firm had garnered around 3.7 billion euros in 2019, and healthy operating margins of 34%, and operating profits in 2019 is expected to be around 1.25 billion euros. Now, the good part here is operating margins. That's something to be noted, which is pretty high, and that's the moat I'm talking about, with respect to the exclusivity and the pricing power they have on the brand value. Now, net earnings in 2019 is expected to be around 700 million euros. They have grown pretty well in 2019, and the revenue rose around 9%, and the total cash flows also increased by around 30% over 9 months in from FY18, and they have a free cash flow. They doubled it to 496 million euros in the 9-month ending over FY19. Now, the historical performance, one thing we need to notice that it's consistent grows at 8 to 10% revenue, and around 17% EPS growth over year, and they do pay a healthy dividend also. So last year they paid around dividend distribution was around 30% of their total net income, which is pretty significant, because they have been maintaining this trends of dividend distribution over the historical periods that we can go up to, and that adds up to the EPS growth also. And they are also pretty good in capital allocation. You can see that they have planned around 1.5 billion euro share buyback, which again is accretive to the EPS with every share buyback, and they have planned it over the next 4 years. So that's a pretty significant number. It's half of their revenue in 2019 that they're planning to buy back shares for. Now, so together with the dividend distribution and the share buyback, it adds a lot of value to the shareholders in addition to their consistent growth of revenues. They're also focused in investing in the new age things like electric and autonomous, but the cars will not hit the road until 2025. That's per reported by their CEO Camilleri to Reuters. Now, the positions on the balance sheet strength, they have around 794 million euro cash, and they have a higher debt in terms of compared to the cash position, but still it's negligible, or it's a standardized debt which they can pay back. They have around 1.92 billion euros, and the operating cash flow is around 1.27 billion euro, and free cash flow we saw it's around half a billion euro. Now the market capitalization is $31 billion, which is a little higher priced over the last, especially it had a higher run in the last 1 year due to their significant outperformance in 2019. And so because of that, with overall bull market conditions that's prevailing, they are trading at a little higher price to earnings, like around 40 times. Now, but over the next 10 years, what I'm looking at here is the visibility of their brand exclusivity and their sustenance for the next 10 years. And precisely that's what I put these gist of points in the next slide, which says why I think Ferrari will still be a great business to hold in hindsight when we look back in 2030. So the strong brand and the aspirational product, it'll always remain an aspirational dream for every a rich person, and its exclusivity is that, and that is going to remain for the next decade as well, which gives edge for Ferrari. Now, the retail merchandise share of the revenue being 10%, they're targeting 10% of the revenue share to be from the retail merchandise. That's going to be margin accretive, and it's going to increase the customer base for their brand diversification on the retailing side. Now, there could always be a debate whether the brand diversification is worth because of the exclusivity they're maintaining, but then a 90-10 exclusivity ratio is, I think, a good balance for growth and premiumization. Now, strong focus on capital allocation, as we saw, towards they are investing towards new designs, and but at the same time they are sports racing car being the core business segment, which is the DNA of the business. Now, company already working towards electric vehicles and autonomous technologies to keep with the future demands. And future of racing is unknown, as in what kind of new technology will emerge and disrupt, especially with the gaming streamings and electronic sports and everything. Now that's a structural threat which Ferrari will have to navigate. Strong management with laser focus on brand exclusivity, and they call it as measured growth, and shareholder returns has been on focus, and customer loyalty is another focus. Now, regular new model introductions with the new designs, controlled growth in adjacent and lifestyle categories, and excellence in racing and measured revenue growth is a winning strategic proposition. Now, that's the picture represents, the four pillars, like they have a measured and controlled growth, they have regular new model introductions and enhancements, and they pursue excellence in racing, that's their core, and controlled growth in adjacent luxury and lifestyle category, that's a retailification. To put it, these four tells the story. It's a telltale sign for the next decade, and hope this was useful. Thank you.